Right now, before you scroll, before you check another app, let me ask you something important. What if the economic collapse that most Americans think is still years away has already started and almost no one is prepared for what comes next? What if the warning signs aren't coming from the future, but from what's happening quietly right now, underneath the surface of everyday life? Because the truth is, the collapse that could change America forever in 2026 didn't arrive with sirens or breaking news alerts. It arrived silently, through policies, debt, inflation, and decisions that most people were too busy to question. And if you're watching this, it means you still have time to understand it. Before we go any further, if you care about protecting your financial future and understanding the real forces shaping the global economy, take a second to like this video and subscribe to the channel. This is Finance and Global Economy, and everything we do here is about helping you see what others ignore before it's too late. For decades, Americans were told a comforting story. Work hard, save a little, invest in the market, trust the system, and everything will be fine. Recessions would come and go, markets would recover, and the American economy would always bounce back stronger. Debt belief became almost sacred. But what happens when the system itself is stretched beyond its limits? What happens when debt, inflation, and declining productivity collide at the same time? That's the situation unfolding now, and it's why 2026 is shaping up to be a breaking point, rather than just another rough year. The foundation of the problem starts with massive, historic levels of debt. Government debt, corporate debt, consumer debt, all rising together. For years, low interest rates made borrowing feel painless. Money was cheap, and the solution to every problem seemed to be more spending. But debt doesn't disappear. It accumulates, and eventually it demands payment. As interest rates rise, that payment becomes heavier, squeezing governments, businesses, and households at the same time. This is not a normal cycle. This is a systemic strain. Inflation is the second crack in the system, and it's far more destructive than most people realize. Inflation doesn't just raise prices, it erodes confidence. It tells workers that their paychecks are worth less every year. It tells retirees that their savings won't last as long as planned. It forces families to rely more on credit just to maintain the same standard of living. Even when official inflation numbers slow down, the damage is already done. Prices rarely go back to where they were, and wages almost never catch up fast enough. At the same time, the job market is sending mixed signals. On the surface, employment numbers may look stable. But underneath, the quality of jobs is declining. More part-time work, more gig work, fewer stable careers with benefits. Artificial intelligence and automation are accelerating this shift, quietly replacing middle-income jobs while creating fewer high-paying alternatives. Productivity growth, the engine that once powered rising living standards, is slowing. That means the economy has less real strength to support all the promises it has made. Housing, once the symbol of American stability, has become another pressure point. High interest rates have locked millions of people out of homeownership. Existing homeowners are stuck with properties they can't afford to move from. While renters face rising costs with no relief in sight, real estate values remain elevated, not because demand is strong, but because supply is distorted. This creates a fragile bubble, one that doesn't need a dramatic crash to cause damage. Even stagnation is enough to hurt household wealth and consumer spending. Now, add global instability to the picture. The world is no longer operating under the same economic rules that defined the past 30 years. Trade relationships are shifting. Supply chains are being rebuilt at higher costs. Geopolitical tensions are forcing countries to prioritize security over efficiency. For the United States, this means higher prices, slower growth, and less global leverage than before. The era of easy globalization is over, and the transition period is painful. By 2026, these forces converge. Higher debt servicing costs, persistent inflation pressure, slower growth, and global uncertainty create a situation where policy options become limited. Governments can't stimulate without worsening inflation. They can't raise taxes without slowing the economy further. They can't cut spending without triggering social backlash. This is what economic collapse really looks like, not a single dramatic event, but a grinding loss of stability that affects daily life. For ordinary Americans, this shows up in subtle but powerful ways. Credit card balances rising faster than incomes, emergency savings shrinking, retirement timelines being pushed further away, small businesses struggling to survive higher costs and weaker demand. Confidence fades, and when confidence fades, spending slows. That slowdown feeds back into the economy, creating a self-reinforcing loop. What makes this moment especially dangerous is complacency. After surviving previous crises, many people believe the system will always be rescued at the last moment. But rescues have consequences. Each intervention weakens the currency, distorts markets, and increases inequality. By 2026, the room for rescue is far smaller than it was in 2008 or 2020. The tools that worked before may not work again. This doesn't mean collapse. Looks like chaos overnight. It looks like frustration. It looks like anger. It looks like people working harder for less progress. It looks like trust in institutions slowly breaking down. And once trust is gone, rebuilding it is incredibly difficult. The purpose of this video isn't fear, it's awareness. Because understanding what's happening gives you an advantage. It allows you to think differently about debt, savings, skills, and long-term planning. It encourages diversification, resilience, and adaptability rather than blind optimism. That's what we focus on here at Finance and Global Economies, seeing the full picture, not just the headlines. A collapse that may define America in 2026 has already begun, not with a crash, but with a quiet shift in reality. The question is not whether the system will change. The question is whether you'll recognize the change early enough to protect yourself and your future. Stay informed, stay flexible, and most importantly, don't assume tomorrow will look like yesterday.